Hi guys, welcome to SavvyMoneyShow with me, your host Sean. We're going to get into some news today and some stocks. I hope you're all protecting yourself in this downturn. Let's get into it. ELMS has announced Chapter 7 bankruptcy filing. I remember everyone was all over this when it was a SPAC and de-SPACing as a future of energy. Now, this is, in my opinion, is going to be the first of many. People are talking about the potential, and of course there's huge potential, but there's no cash out there. Venture capitalists talking about not funding anything that isn't a sure thing. Another one that people were pumping, there was $20 a stock. Astra is $2 a stock. Why? Well, you only have to look at the fact it had 250 million cash end of March 2022. It burns 75 million every 3 months. They have about 175 million left and will run out of money by the end of the year unless they drastically cut expenses, lay off staff, or do massive dilution. Unless the next 2 launches are successful, Astra won't make it to 2023, let alone 2025, without diluting. And the cost of the shares now means it will have to be massive dilution. They already have a massive amount of shares on the market for what they are, and this is why you need to go for companies that can cover their cash burn. Don't forget to hit the lovely like button and the sexy subscribe button, and don't forget the bell notification. You'll be notified when a new video gets uploaded. And the free links in the description below. You can pick up a free share worth up to £200. And check out our Discord. And if you want a more in-depth analysis of any stock or market conditions, then why not look at our upgraded membership program and support us. Now, Amazon launches new resale programs to cut down warehouse waste. If you look at Amazon's prospective growth, they're considering 4%. Now, Amazon Web Services should do more than that, which means their e-commerce will be negative growth from looking at this news. They have invested a lot of money during pandemic in building and taking out long-term leases on warehouses, because at the time every e-commerce wanted to get more and more warehouse space. The problem is they have hundreds and thousands of square feet that are custom made for Amazon that are still not up and running because they have specific needs. They have robots in there as well. Now, I was considering doing a video on the advertising side of business as well, and how Google, Facebook and Amazon could be hit by new style advertising, and how if they don't change in the next few years they could be hit. But from their own guidance, it looks like they're expecting to be hit sooner than that. So yes, Amazon Web Services is a cash cow, but it looks like the other 2 sides are going to be declining. But you need to decide if Amazon is cheap enough for you to go in. I'm not saying Amazon's a bad buy. I'm not saying this Goliath's about to be knocked down by David, but I'm just saying bear this in mind for the next guidance. Sorry, next earnings. Now, energy companies, CPG, it is not on most people's radar. Market cap is 4.34 billion against an enterprise value of 5.87 billion. PE of 1.6, forward PE of 4.5, and I think that they're sandbagging those that forward PE numbers. Price to sales 1.76, price to book 0.86. Now, those are amazing numbers for any company, let alone an energy company. And you can see that, sorry about that, the gross profit is 2.2 million and operating income is 2.2 billion. Operating income is 1.4 billion. And you will see here that their assets cover their liabilities, and it's one I wouldn't dump all my money into, but they have free cash flow of 849 million, so I think it's one worth looking at. Now, Connor Gold Solutions, KGKG, they are due to release news about a new partnership. They think of them as an early stage monster group company. Their market cap is 7.78 billion. 7.78 million versus an enterprise value of 10.89 million. A price to sales under 10. I think it's very early stage, but I think it's one worth looking into. This is one that can 5x if you have the time and the patience. Hero are a company that apparently have 7 announcements to come out fairly soon. They've been working very hard behind the scenes, and they're one that I'm excited about. Again, not one that you go all in on, but one that you dabble a little in. You find the right point and then you put some in, and you leave enough to average down because of the way the market is. I'm sure you know by now Tesla have filed 3-for-1 split, and it's I wouldn't expect the same run up it had the last split, but you have to ask yourself why you bought Tesla in the first place, if you have, and you have to ask whether you're planning for a quick trade or an investment. They also have over 3 years worth of Cybertruck orders as the demand grows, and their China demand is roaring back with 212% month-over-month production increase. And news has just come out that BYD is to supply batteries to Tesla, according to an executive. Now, Tesla have also agreed to build a battery and EV factory in Indonesia. We're going to have a look at a couple of tanker stocks, which is going to be IMPP with 32 million market cap versus 56 million enterprise value. Price to sales 0.13, price to book 0.33. They've just put some tankers on long-term lease. Now, that's something I like to see. Now we're going to look at Zim, which is my favourite. Discount cash flow model brings it $135 a share. You see it at $52, and it has 17% dividend. If it can keep that or grow that, would be amazing. Market cap 7.75 billion against enterprise value 7.39 billion. P of under 2, and the price to book under 2 as well. Now, these all seem good, but you've got to remember, you have to take, with the DCF model, you have to take the dividend off. And some more shipping stocks. NMM, market cap 872 million versus 1.89 billion enterprise value. PE of 1.3, price to sales 0.92, price to book 0.49. One I spoke about last week, ESEA, which gives a 7% dividend, which you just missed. 182 million market cap versus 273 million enterprise value. PE of 4, price to sales 1.86, price to book 2.37. And when I spoke about last year, I still like, but I would want it to come down first, is Scorpio Tankers. I picked it up around $18. It's now over $30. It's 1.73 billion market cap, 4.4 billion enterprise value, forward PE of 7, price to sales under 3, and price to book under 1. The thing I like about this is they don't work with the Suez Maxes, they work with the smaller tankers, and you have a lot of ports that can't accommodate the Suez Maxes. So these tankers can dock anywhere, basically. So if there's an issue with docking, or we have something like some kind of lockdown with the monkeypox or COVID outbreak again, these will be well suited. They have a lot of tankers on their books, so this is one that goes under the radar most times. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.